Negative yields in the U.S., what would it take for that to happen?
Yeah, well, thanks for having me, Joe. What would it take for negative yields to happen in the US? Well, it's probably not around the corner, but I think what it would take is a serious downturn in the economy, a recession, in which the Fed will take the rates all the way down to zero, will restart QE. And I think at that stage, we may well see negative yields in the US, as we are seeing them in many other parts of the world.
So in a blog post, Joachim, you wrote that essentially central banks aren't necessarily the victims of this per se, or aren't really the cause of this, rather, but rather the victims of, I guess, some broader secular trends that are forcing rates down.
Yeah, that's right. I mean, obviously, central banks influence the short end of the curve and also the longer end through QE. But in the end, they have to respond to fundamental forces. And what's going on in the world, what has been going on for a long time, and that was part of our new neutral thesis, which we came up with 5 years ago, is that there is a global saving glut, right? I mean, for various people, for various reasons, companies and many households need to save more, want to save more for the future. At the same time, there's very little demand for this excess capital, for these excess savings, and this is driving down the equilibrium interest rate. And then if central banks stem against that, if they keep their rates higher than the equilibrium rate, then what you get is recession and deflation. So that's in the end why, I think central banks are not the villains in this game, they are the victims.
What is the end game, Joachim? How long can we sustain negative rates? Is it ad infinitum?
Well, it's probably not ad infinitum, but I think in the end, this will spark some other reactions from other policy areas. I mean, negative yields are not great. I mean, definitely not for investors and also not for psychology. So I think where we will end up eventually, but that's probably still several years down the road, is that fiscal policy becomes much more active. Because that's one way to counter the global saving glut, right? If the private sector wants to save more, then somebody else has to save less or has to go deeper into debt. And that other entity is likely to be government. So I think the end game is that once monetary policy is exhausted, once yields are in negative territory almost everywhere in the advanced world, that's the time when we see a much bigger fiscal response. And that could then actually get us out of this negative yield environment.